You may have heard that Supermicro has finalized the issuance of around $700 million worth of convertible notes. So these notes are the top of, or rather, the pinnacle of all financial instruments any company can issue. It entitles them to options and all sorts of things. So for every $1,000 worth of bonds you buy, you get around $16 or thereabouts, which converts to a price of around $61. And SMCI is currently trading at $16. I mean $61. It got the rejection at 60.47. So it seems the company is quite positive that it's going to even trade way, way, way higher than that. And at the same time as well, the investors and the hedge funds that are buying this probably know that this is going to move. The stock is going to move, and the reason why they think it's going to move is because when they buy these instruments, what they do is that they short the stock. When they short the stock, they amongst other things, if they short the stock, especially if the stock is trading above the conversion price. So maybe it may not be happening now, but SMCI actually did issue the issue. This is not the first first convertible bonds to convertible notes they're issuing. So they might have issued other ones that have a conversion price that is probably lower than 61. But I believe there may be the conversion prices may be higher than 60, 61, maybe much higher than what we're looking at right now. But this is quite an interesting one because amongst other things, we'll see what happens here. This it's lends these bonds, these notes that were issued, it lends into the hedging strategy known as convertible arbitrage. In such trades, investors buy the bonds and sell the shares short, betting that the underlying stock remains volatile. The more the stock sways, the more profitable the strategy becomes. That is because a convertible bond is a hybrid security composed of a bond and a call option that confers the right to convert the bond into a specific price. So the owner of a convertible bond is long the option. So they are always selling the stock. They're always selling when the stock goes higher and buying when it goes lower to stay hedged. So this is what's going on. It's there's nothing to hate here. There's nothing to hate here with this issuance. I think the company is expecting that they will get more momentum coming in. With because right now the price is currently the conversion price. The stock is currently trading below its conversion price, so these hedge funds will be buying right now. They'll be buying, and in future when it rises, they'll be shorting. So things are going to remain volatile. It seems. Things are really, really going to remain volatile. So, but speaking of what they're really going to do with the funds, let's see now. NVIDIA is slated to ramp up production of its latest Blackwell GPUs, and this could in turn scale up demand for it, which are used to deploy the latest GPUs. Moreover, AI models are increasingly multimodal now, moving from just text processing to working with speech, images, and videos and 3D, calling for higher computing power and consequently higher demand for servers and computing capacity. The company's financial year 2026 revenue guidance that is ending in June of 2026 was much stronger than expected, coming in at about $40 billion, which means that the revenue growth rate set to improve to 70% in that year. Okay, so although the server market is commoditized, Supermicro does have the competitive advantages, given that its products are seen as being more customizable and much more energy efficient than those from its rivals. So its customers are also likely to opt for more premium products. For example, the company estimates that costly liquid cooling systems for servers, which were relatively rare in the pre-AI era, will be installed in 30% of server racks it ships next year. The company is also steadily boosting its production capacity. So if the company can grow its sales by another 35% in 2027, this would take sales to about $54 billion for that year. and this could translate into a growth rate of around 3.6% over the next 3 years, or over the next, yeah, even the next 3 years or thereabouts. So yeah, I think it's the company is seeing what's going on, and they're probably very confident that the 10K disclosure will come Tuesday, or even before that, Tuesday 25th, or even before that. So they know what they're doing. They are they are yeah, they know what they're doing. And if you think nothing's going to happen, if you think this is there's no upward push coming in, there is upward push coming in. You can see that very well. I was able to explain that. Hedge funds that have just bought these $700 billion, it's mostly hedge funds that must have bought them. And indeed, regular folks may have also bought them, but it's definitely mostly them. So they will be buying right now that the price is not up to their conversion price, which is around $61. They'll be buying now, and to stay hedged. And when it gets higher, they will also be selling. So it will be an interesting one. It will be an interesting play. So if you come back, this is its daily chart. We have this negated upper projection of 80.74. So I think this is definitely a price that can definitely come back and play in the coming days. And indeed higher prices. And indeed higher prices. So these are sort of things that hedge funds will be watching, and indeed all of us as well. So in the coming days and the coming weeks, SMCI will definitely be a very interesting play to observe and even get involved in. So if you have a look at its 1 hour chart, we can see what's planning out there. Upper projections that even towards the highs of around $66 or thereabouts. This is around 66, so I'm thinking this could even be 70. For some reason, I can't get there, and this could even be around 75 or even higher than that. So yeah, interesting. It's interesting stuff. Interesting stuff. So I will definitely continue to update you. Thank you very much for watching this video.